All right, let's dive straight into Nvidia's second quarter fiscal year 2026 financial results. Today, we're taking a deep dive into the numbers, the strategic calls from management, and, well, what it all means for the company's place in this rapidly evolving world of artificial intelligence. Our mission, really, is to cut through the noise and deliver the crucial insights you need to understand what's truly driving this powerhouse.
Indeed, and this deep dive is all about pulling out those most important nuggets from their earnings call. We'll unpack the core financial performance, the strategic insights directly from leadership, and sort of connect the dots to see NVIDIA's trajectory, in the AI landscape. It was a quarter packed with significant developments, a strong financial beat, but also some interesting market dynamics we definitely need to explore.
Okay, let's kick things off with the headline numbers for Q2 FY26. Nvidia delivered a truly robust quarter, surpassing market expectations pretty much across the board. They reported GAAP EPS of $1.08 and non-GAAP EPS of $1.05. Both figures comfortably beat the consensus, which was sitting around, $1.01.
Yeah, exactly. And on the top line, the revenue story was equally impressive, hitting an astonishing $46.74 billion. That outperformed the consensus of roughly $46.05 billion. And this isn't just a small beat. We're talking about a substantial 56% year-over-year increase and a healthy 6% quarter-over-quarter growth, too.
Wow.
The data center segment, well, once again, it was the absolute powerhouse, bringing in $41.1 billion. That accounts for approximately 88% of total revenue, just massive.
88%.
And gross margins were also rock solid, with non-GAAP at 72.7%.
Okay, so despite these stellar numbers, you might have noticed the market's initial reaction was, a bit tempered, right? A slight dip in share price after the release. It certainly set a kind of bullish but tempered tone for the call itself. So what do you think was behind that initial hesitation, even with such strong performance?
Well, that's the fascinating tension here, isn't it? While the overall beat was clear, the data center segment's revenue, despite its massive size, came in just a hair below some of the street's most, let's say, aggressive expectations. And frankly, the ongoing China opacity around the H20 chip sales, that continued to weigh on sentiment. It led to what some analysts dubbed a great, not fantastic reception, which really highlights how high the bar is set for NVIDIA these days.
Yeah, that makes sense. It seems the market is looking for absolute perfection. But let's look beyond those initial jitters and really unpack these results. The data center segment is clearly the dominant force, a staggering 88% of total revenue, as you said. But what's truly fueling that momentum right now? And what did management emphasize about their flagship platforms that makes them so indispensable?
What's truly fascinating, I think, is the almost aggressive push into their next-generation Blackwell platform. CEO Jensen Huang called it a generational leap. They confirmed Blackwell Ultra is now ramping at full speed. That's huge. And production shipments of the GB300, that's the Grace Blackwell superchip, a core component of their new rack scale systems, started right in Q2.
Okay.
Companies like CoreWeave are already reporting, get this, a 10x increase in inference performance on reasoning models compared to the previous Hopper generation. 10 times. And the current production run rate is back at full speed, churning out about 1,000 racks per week, with even further acceleration expected in Q3.
1,000 racks a week, wow. And that 10x improvement in performance per watt energy efficiency with the GB300 NVL72 AI factories, that's their big rack scale system, right?
Yeah.
Integrating 72 Blackwell GPUs. That really stands out. But for our listeners, what does that practically unlock? Are we talking about AI models that can now do things previously impossible, or is it just faster versions of what we already have?
Yeah, that's the critical insight here. We're moving beyond just, recognition AI to what they're calling reasoning AI and agentic AI.
Yeah.
So imagine an AI that doesn't just identify a cat in a picture, but can actually plan a complex scientific experiment or synthesize a novel drug compound, or even autonomously navigate and perform really intricate tasks in the physical world.
Right.
This long thinking, as they put it, doing research, planning, using tools to produce better, more reliable answers, it demands exponentially more computation. Jensen Huang said 100 times, 1,000 times, and potentially even more than the prior models needed.
1,000 times.
So that 10x efficiency means these incredibly compute-intensive multi-step processes become, economically viable at scale for the first time. It's not just faster. It's really a leap in capability that redefines what AI can achieve.
That's a powerful distinction, not just making existing AI faster, but enabling an entirely new class of intelligence. And looking even further ahead, they're not stopping at Blackwell. The Rubin platform is already in the fab.
Already in the fab, yeah. On schedule for volume production next year. And it consists of 6 different types of chips, including the Vera CPU and the Rubin GPU. This just maintains NVIDIA's really ambitious annual product cadence for continuous innovation across compute, networking, systems, software, the whole stack.
Right.
Precisely. And this relentless pace isn't just about individual chips. It's about NVIDIA constructing this entire ecosystem, a data center moat that becomes increasingly difficult for, well, any competitor to breach. They're not just selling components, they're selling this integrated solution. And to underscore this, they announced the RTX PRO 6000 Blackwell server edition for mainstream servers, plus new Spectrum XGS Ethernet designed to unify disparate data centers into these gigascale AI superfactories.
Gigascale AI superfactories.
Imagine like an entire continent's worth of processing power consolidated into one coherent, immense brain for the most complex AI challenges, and also the NVFP4 4-bit format. That's a specialized, lower precision data type that drastically speeds up model training by making computations more efficient. They're saying 7x faster training than the H100.
7 times faster training.
Yeah, these are all significant developments bolstering that full stack solution.
It's clear they're building out a really comprehensive ecosystem. Speaking of which, networking also had a record quarter. Revenue of $7.3 billion. That's up 46% sequentially and 98% year over year. Spectrum X Ethernet alone now has an annualized revenue run rate exceeding $10 billion. So how are they positioning their networking solutions in this AI-driven world, given its increasingly critical role?
Well, they outlined 3 key networking technologies, each addressing a specific challenge in AI infrastructure. First, there's NVLink for scale-up, which is basically about building massive virtual GPUs or compute nodes within a single system. Second, InfiniBand and Spectrum Ethernet for scale-out, connecting all the nodes within an AI factory. And third, the new Spectrum XGS Ethernet for scale across, literally connecting multiple geographically dispersed data centers into those immense superfactories we just talked about.
Okay, scale up, scale out, scale across.
Exactly. And Jensen Huang highlighted that choosing the right networking can make an AI factory tens of billions of dollars more efficient just due to performance improvements, effectively making the networking cost-free for hyperscalers. It's not just a pipe, it's really an intelligent fabric.
You know, that full stack co-design problem idea sounds incredibly powerful. But given the immense resources of the major cloud providers, I mean, they're developing their own custom ASICs, right? Aren't they going to eventually build their own full stack solutions? How does Nvidia maintain this lead in the long run against such, well, formidable competition?
That's a crucial question and one they address directly. Jensen Huang emphasized that accelerated computing is a full-stack co-design problem, far more complex than general-purpose computing. It's not just about the chip, the system, the software, the libraries, the compilers, the whole ecosystem working together perfectly.
Right, the whole package.
Exactly. He pointed to the rapid, almost dizzying evolution of AI models, from autoregressive to diffusion to multimodality and NVIDIA's ubiquity. They're everywhere, every cloud, on-prem. This ensures that developers building new model architectures often release them on NVIDIA first. It just makes sense. He stressed that their holistic solution, including all 6 chip types for platforms like Blackwell and Rubin, superior perf per watt, and that comprehensive ecosystem, positions them really strongly against just chip-level competitors. Especially in a power-limited data center world where efficiency directly translates to, well, operational revenue. It's just hard for any single customer, even a huge one, to replicate that breadth and depth across all those layers.
That certainly sounds like a formidable competitive moat they're building. Okay, moving to capital returns and the guidance for Q3. Nvidia announced a new $60 billion share repurchase authorization. That's on top of the $14.7 billion remaining from the previous one. And they returned $24.3 billion to shareholders in just the first half of FY26. This is a massive vote of confidence, isn't it?
Oh, absolutely. This is a powerful signal about their capital return strategy. It indicates really strong multi-year cash generation capabilities and management's confidence in their future. Huge confidence. For Q3 FY26, Nvidia projects total revenue of $54.0 billion, plus or minus 2%. And non-GAAP gross margins are expected to rise even further to 73.5%.
Wow.
However, and this is the key caveat, this guidance explicitly assumes no H20 shipments to China. These are their specific export-controlled chips tailored for that market. Zero assumption for those.
Right. And that brings us directly to the China market, which remains, well, a key area of discussion and, frankly, a major source of uncertainty for investors. What's the latest update there?
So as we said, there were no H20 sales to China in Q2, and the Q3 guidance assumes zero. However, management did indicate that if geopolitical issues ease up, they could potentially ship anywhere from $2 billion to $5 billion in H20 revenue in Q3 alone, and potentially even more if orders and licenses increase down the line.
2 to 5 billion potential upside in just one quarter.
Exactly. There's also this reported U.S. government expectation, though it's not codified regulation yet, to receive maybe 15% of the revenue from any licensed H20 sales. That's another wrinkle.
Interesting. And Jensen Huang himself sees the China market as, what, a colossal $50 billion opportunity this year if they could address it with competitive products?
Yeah.
Potentially growing at 50% annually. He highlighted China as the world's second largest computing market, home to about half the world's AI researchers.
Yeah, and many leading open source AI models too. He definitely sees it as vital to stay engaged. His argument is that it's crucial for American tech companies to engage with this market, particularly given the global use of open source models that actually originate from China. These open source models are fueling enterprise AI adoption and robotics innovation worldwide, So they continue to advocate for the approval of Blackwell for China, believing it ultimately benefits the U.S. economy and its leadership in competitive AI markets. They're making a strong case for re-engagement.
Okay. While the data center segment is undoubtedly the star, Nvidia's other divisions continue to quietly yet significantly contribute to their overall strength, right? Let's briefly touch on those results.
Absolutely. Gaming revenue, for instance, reached a record $4.3 billion. That's up 49% year over year, driven by the new Blackwell GeForce GPUs and the RTX 5060 desktop GPU. Blackwell is even coming to GeForce now, their cloud gaming service, in September, offering RTX 5080 class performance.
Cloud gaming getting a boost.
Yeah. And professional visualization revenue was up 32% year over year to $601 million. Automotive revenue, which includes their in-car compute, grew 69% year over year to $586 million. That's primarily from self-driving solutions and the start of shipments for their Nvidia Thor system on chip, the Thor SoC.
Right, Thor. And we also saw the continued rise of sovereign AI. That's this global trend where nations are building their own AI infrastructure, often with Nvidia's help, right? To ensure data sovereignty, national security, foster their own AI innovation.
Exactly right. Nvidia is actually on track to achieve over $20 billion in sovereign AI revenue this year. That's more than double last year's figure. This includes landmark initiatives like in Europe, where the EU plans to invest 20 billion euros to establish 20 AI factories. It clearly demonstrates the strategic importance nations are placing on controlling their own AI destiny.
Okay, so understanding this bullish but tempered market sentiment, the critical question for investors really shifts to what's NVIDIA's long-term play here, and what should we really be watching for going forward?
Well, NVIDIA's long-term strategy is anchored firmly in that full-stack approach to AI infrastructure we discussed. Jensen Huang projects a staggering $3 to $4 trillion AI infrastructure spend by the end of the decade. 3 to 4 trillion.
Trillion with a T.
Yeah. He noted that hyperscaler capital expenditure has already doubled in just 2 years to $600 billion annually. NVIDIA sees itself as a significant contributor to this, representing maybe 35% of a typical $50-60 billion gigawatt AI factory's cost. It's just an immense market they're not just participating in, but actively defining.
So what are the key catalysts then? The things we could be watching for that could shift market sentiment or maybe accelerate their growth even further?
There are several key areas, I think. First, any clarity on China licenses and H20 shipments would be a major positive catalyst. That uncertainty needs resolving. Second, further milestones in Blackwell system availability and customer ramps, particularly seeing wins beyond just CoreWeave, will be critical validation. Third, keep an eye on updates on hyperscaler capital expenditure. If that continues to accelerate, it signals continued strong demand. And of course, the company's gross margin trends. Getting towards that mid-70s range by year-end would be a strong signal. Plus, any new product announcements around networking, software stacks, and more sovereign AI wins. All important signals of their ongoing momentum.
Okay, it's time for our This Is Not Financial Advice segment, where we put on our hedge fund analyst hats for a moment. For the investment committee today, I'm pitching a deeply contrarian, yet I think strategically plausible idea on Nvidia. It's a long-dated volatility play that tries to capitalize on these short-term market anxieties while betting on NVIDIA's fundamental long-term strength.
Okay, interesting. Contrarian. Tell us more about the strategic setup. How would that work?
Right, so here's the essence. The street's current obsession, as we've discussed, with China's H20 sales and the exact data center revenue mix, well, it seems to have created this short-term volatility premium in the stock price. However, the long-term story, the Blackwell and Rubin ramp, the multi-gigawatt, multi-site AI superfactories, vision that seems fundamentally intact. So this great, not fantastic reaction, I believe, presents a potential opportunity.
Okay, so how do you structure the trade?
So we'd look to structure a trade that potentially profits if the current market's tempered reaction proves temporary, something that allows us to maybe capture premium from the elevated short-term volatility. For instance, selling some out-of-the-money put options expiring maybe just after Q4 2026 earnings, say a $150 strike. Simultaneously, we'd want some long-term, deep out-of-the-money protection, so maybe buying an even deeper out-of-the-money put, say a $100 strike expiring further out, maybe Q1 2027.
Okay, a calendar spread structure, selling near-term, buying longer-term protection deeper out.
It's exactly. The short put aims to capitalize on the likely normalization of sentiment once there's more China clarity, or just continued strong demand for Blackwell, ideally leading that put to expire worthless. The long put acts as an extreme hedge. It's protection against a significant geopolitical escalation or some unforeseen, truly disruptive shift in the AI silicon landscape that really erodes Nvidia's competitive advantage, beyond what's currently priced in. It's essentially a strategy that expresses confidence in Nvidia's core narrative, the long game, while acknowledging and hedging those extreme black swan type tail risks.
Got it. A bet on the long-term dominance, but with a defined risk hedge for the truly unexpected. Makes sense as a concept.
So to wrap things up then, Nvidia delivered another, record-setting quarter, showcasing exceptional execution and relentless innovation with its Blackwell platform, really leading the charge into a new era of AI.
Yeah, and their vision for that multi-trillion-dollar AI infrastructure market through the end of the decade, fueled by the emergence of reasoning AI and the age of physical AI, it paints a really compelling long-term picture. While near-term market sentiment was, as we said, somewhat dampened by the data center mixed details and the ongoing China H20 uncertainty, the strategic capital return program and that rapid product development cycle highlights a really robust underlying business poised for continued leadership.
And as always, please remember this information is for educational purposes only and is definitely not financial advice. Please consult with a qualified financial professional before making any investment decisions. Thank you so much for joining us on this deep dive into Nvidia's latest earnings. We hope you gained some valuable insights.
Yeah, we'd love to hear your thoughts and any questions you might have. Until next time, stay informed and keep learning.
And maybe as you reflect on this, consider how Nvidia's full-stack co-design problem approach might not just be a strategy for them, but perhaps a new blueprint for competitive advantage in all rapidly evolving tech markets. It's certainly some food for thought for you to explore. Until next time.